guys, it's Friday, so TGIF, thank God it's Friday. I won't be trading for the rest of the day because last Friday I gave quite a bit of profit back to the market, and it's quite frustrating. It could have been totally avoidable had I just sat on my hands, but I felt like I had to trade. I mean, you don't really have to trade. If you've had a positive week, just hold on to your profits, and there's nothing worse than over trading anyway. So that's what I'm going to do. Just going to make a quick video, and it's going to be about the daily shifting, these two new columns, and we can see we've got some synthetic sentiment as well, where we're looking at dark colours essentially. So Kiwi CAD, Kiwi USD, you know, that they're the ones that we could be looking at. So I think probably what we'll do is maybe focus on Kiwi CAD and Kiwi USD. Kind of makes sense. Euro is a little bit extreme. We're not mega extreme, but we're close to the stop loss clusters. So the Euro USD, even though we've got, you know, confirmation being a sell and the USD being a confirmation of the buy, I just looked at the Euro USD chart and we're quite close to the stop loss cluster below. So I'll show you EU, GU and NU, and I don't know if anyone's going to trade dollar CAD, Kiwi CAD, but you know, I can present a chart for that and we can see whether or not we're actually going to be selling off on that. We should be sentimentally, likewise with Kiwi USD. So let's have a look at some charts. I'll move that across, in fact, and let's have a look at some charts. So we'll start with EU, because the thing with EU, we're quite extreme, and we're quite close to the stop loss cluster, so it's quite frustrating. We're only 12 pips away, 13 pips, so if everything is a liquidity probe, then that could just be like the destination and then we can bounce. On the daily we're hitting some fib support as well, but you can see how where they've gone long up here and they've held on long and it's gone quite sideways, so you know, these guys have got quite destroyed. Let's have a look at that. It's a 250 pip move from them going long, crossing the 50% line. So you do definitely want to get a copy of the FX SSI indicators. Remember to use the quasi DB code. You have to get these indicators, they're so powerful. So you know, you could just profit on that alone, just that one indicator. Just look at the 50% cross, you know, look at a little bit of technical analysis, and then you know, you've done quite well. So there's that. On the hourly we're quite close, so that would be a bit tricky. Daily we're in a big descending channel, you can see, and what the thing is, what I said about the Fibonacci support, is that if we take this, which is X, A, B, C, D, this is the BC, we use that and we've got some 261 support here, which kind of coincides with that harmonic support as well. So maybe not much more to go on EU before we hit some technical support. Yeah, 70 pips, so you know, maybe we can come down there and get that technical support. We are a sell here and they did go long, and you know, the SLC. So let's have a look at GU, and we'll do NU as well. Oh, there's weird lines for, because I was looking at a small time frame probably. That's quite accurate, whether how that was made. So yeah, let's have a look at the GU. So daily, this is the bearish. Oh god, what the hell was this? Oh, that's annoying. Oh, there it is. That's a stupid thing. Right, so this is a bearish development here, the 61.8 break. So this is calculated using that angle, and that's a 61.8 there. So 132.99 is going to be a good resistance. The SLCs are fairly close, 1311 and 13040. Go to hourly, and hourly is a bit weird. Yeah, Owl's escaped the trend line. We'll go back to the daily. But the thing with the daily, you can see how that line is important because you know, we had a respect of it pretty much dead on. We tried to go above but failed. So that's why the 61.8 is quite strong on that diagonal line. Hopefully that makes sense, the logic. It's just using that angle there. So really, theoretically, we can come down, because we've broken the 61.8, we can probably come down to the 100. And that's at 125.22. It's a big move away, but we've broken that fib support. So technically this is fairly good. Maybe look at the, well, I suppose the hourly didn't look that good, so that's the same. This looks weird on the small time frames. Yep, weird. H4, same sort of thing, isn't it? We're breaking that pitchfork, so keep it on 13061. If we break below that, we'll get the stop loss cluster below 13039. So yeah, I mean, keep an eye on that. That could be a good level to look at actually. Look at NU and try and present the bearish cases for these, and because we sentimentally should be looking for sells. H4, so how are we looking? So we've got an ascending channel and we've got that 38.2 here. So there's the angle there, so let's zoom in. So 68.92. So you know, if we go above, that could be quite bullish. We could maybe look to sell at the stop loss cluster 69.20. We're 30 pips away. That could be a good idea. Have like a sell limit there potentially, and then you know, try and maybe get the SLC below. We have to remember that the Kiwi is going to appreciate if we're risk on as well. So I think before I wrap up the video, I'll show you an S&P chart because we're actually quite strong sentimentally on risk. That could be quite bearish. So we've got the break of the shift channel on NU. So 69.15. So maybe we might get that stop loss cluster. And if we go below 69.15, you could sell there, and then you can target the SLC below. But we have to remember, you know, the risk on flows, which is kind of frustrating because it does adds like a layer of complexity where we, you know, we think, oh, this looks like a buy or sell sentimentally, and technically we have to remember the risk on flows and how these currencies respect risk on, risk off. Kiwi is quite sensitive to risk, so I'll show you S&P and then I'll just finish up the video. So yeah, so this can override all your FX plans. If we're risk on, it's going to impact your dollar and it's going to impact your yen, Aussie, pound, Kiwi, euro, CAD. So if we're risk on, it's going to impact everything that you just saw technically. So this is the buy signal on the S&P here. They went short here on that candle. Well, this candle here, that was probably a ruse. We continue to go up, we'll sell off. So that will help those charts that I showed you. If this sells off, then those setups will play out. If this comes up, they won't. So this is why you need to look at S&P. If we're negative, then it's going to be dollar positive. If we're positive on this, it's going to be dollar negative. Right, so we have to remember, no matter how good you are at technical analysis and your sentiment, you have to keep an eye on your fundamental flows. And regardless of what happens here, if we go massively risk on, this is going to perform well, regardless of technicals and sentiment as well. So got to be very careful, know where your exit is, potentially place orders. Orders are quite good because you know, you let price come to you, you don't have to chase price. So you could potentially have an order there for NU with a stop here at this median line, for example, and if you get stopped out, there's like a 10 pip stop, so it's not really too much of a problem. If you enter now, you run the risk of just it going sideways or going against you. If you've got an order and it doesn't fill, it's no loss. But if it does get filled and it goes well, then that's great. If it gets filled and you get stopped out, it's only a 10 pip stop. So maybe orders are the way to go. If you enter at market, it's pretty much like you've stepped into the casino. If you put an order, then you know, it's I don't know, it's less gambly, I suppose, if there is such a word as gambly. It's gambling, I suppose that's probably a better word. Because if you enter at the roulette table, this is spinning violently right now. If you put like your bet on there, then this can spin, and that's fine, it won't affect you, it won't impact you. But if you put your bet on there and it does get filled, then it's taking out the gambling component completely. So maybe that could be good. Orders maybe are the way to go. And maybe keep an eye on your synthetic currencies down there. They'll change every 15 minutes, just so you know. And we could have looked at Kiwi CAD, but I don't think anyone trades it. So, and we'll see how we go. So remember, you want to get things to align. And Aussie and CAD are, Euro is for a sell, as you can see. Kiwi is now fluctuated, so so this goes to show how the sentiment shifts a lot. So yeah, got to be careful with Kiwi, because what's happened is that they've shorted it by 1%. If they've shorted it, we can come up. So you know, this is a 1% move can indicate more upside. So keep an eye on this. So you see how it's dynamically shifting, and it's very fluid as well. So you have to be careful. And that's that. So have a good weekend. Trade safely. Remember, you've got to keep an eye on your S&P, keep an eye on your Dow Jones and DAX. It's really, really important, because if we go risk on, it's going to impact everything, and you don't really want to be caught off guard as well. So getting an application on your phone with indices, the investing.com is a good one to use, or you can use TradingView, which I assume that everyone's got TradingView account. Just get indices watch list on there. If we're massively green, it's going to impact everything. If we're massively red, it's going to impact everything. So have a good weekend. I'll be back on Monday with the COT data, and we'll see how we go for the week ahead. Have a good one and enjoy yourselves.